Hey guys, welcome to accounting. Today we're going to do something a little bit different. You've been preparing T accounts, you've been provided with a list of transactions, and you've taken those transactions and placed them on a T account. Well, today we're going to do it backwards. Today I've given you some T accounts, and you are going to take these T accounts and analyze them, and then you're going to tell me what happened in the transaction. You're going to describe the transaction. And I'm going to take the review quiz 2-3 that we used the other day, and I'm going to take these T accounts apart and show them as an example, and then you'll have a turn to do your assignment. So the first thing we do, we're going to be completing this form here, and we're going to take transaction A, that's the first one, so we always want to identify our transaction. So here's transaction A, and if I look for it, I see there is a $5,000 debit in cash, and if I look around here, there's a $5,000 credit in revenue. So my account debited for this transaction was cash. The account credited was revenue. And then my transaction description would be, let's see, I don't remember what Lynn Dowdy was, but we will just say collected cash on sale, because sale is revenue. So that's all you need to do for that one. Now look, let's go for transaction B. B, I see is $600 credit to cash, and if I look over here, I also find the matching debit for $600 in rent expense. So my transaction B, the debit is rent expense. Now remember, debit is on the left side of the T account. It could be increase or decrease, but debit just means on the left side. Credit means on the right side. Now let's go back to here and talk about this before we move on to transaction B. Transaction A was a debit to cash, and it was a credit to revenue. Well, I know cash is an asset and it has a normal debit balance. So I'm increasing cash because I made a sale and I collected cash on the sale. So service revenue, revenue is a credit. It has a normal credit balance. So making a credit in this account increased it. So I increased revenue by $5,000. Okay? So now transaction B, let's look at it again. Let's find our debit first. Rent expense was our debit. So I'm going to say rent expense, and I'm going to abbreviate there. And then my credit was cash. So, and I'm going to go back and I'm going to look at this transaction, because an expense has a normal debit balance, so I'm increasing rent. And cash, of course, being an asset, has a normal debit balance, but I decreased it by $600 because I paid rent. So, in this transaction, you can just say paid rent. And you could even say paid cash for rent. All right, now transaction C, let's look. I always go to cash first because usually cash has the most activity, and if you look around, you can usually find your next transaction in cash. So I always go there first. But C is a credit to cash for $540. Now I need to find C, a debit in another account, and I see it down here in utilities expense. So I'm going to say C, and my debit was utilities expense, and my credit was cash. So in looking at this, because expense, like we said, has a normal debit balance, and we increased utilities expense. That means we incurred an expense. And we decreased cash because we credited it. So we must have paid cash for utilities expense. So that's what our transaction description will be. Paid cash for utilities. Okay? Now let's go on to transaction D. And I'm going to go ahead and put a D here. And D, I see, because I'm always looking at cash first, I see that it has a credit of $1,800. So I have paid cash for something. Let's look and see what we can find D. D is down here in salaries expense. And of course, salaries expense has a normal debit balance, and I'm increasing it. So I have incurred an expense for salaries. So let's put this in here. I debited salaries expense, and I've credited cash. So, going along with what rent and utilities was, I have paid salaries, and I paid cash for salaries because I see it's coming out of cash. So, our transaction will be paid cash for salaries. Okay? Now, let's go to transaction E. I'm seeing right here, E is a debit to repairs expense and a credit to cash. So, E, going along with my other expenses, I have debited repairs expense and I have credited cash. And I know that because this amount is on the right side of the T account. Just because it's on the right, I know it's a credit. Just because this one's on the left, I know it's a debit. Now, it depends on the type of account, whether it increases or decreases. So, that depends. But an expense is a normal debit balance, so I have increased it. So, this one will be paid cash for repairs. All right, now, the last one I have is F. And I see F is a credit in cash, and it's a debit in drawing. So let's write that down, and then we'll talk about what that means. We debited drawing, so rather than say Lynn Dowdy drawing, I'm just going to say drawing. And then I'm going to say we credited cash. So, drawing, it goes along with the capital account. Lynn Dowdy is the owner of the business, and she has taken $500 out for personal expense. Now, you could do it one of two ways. If you have a drawing account, you debit drawing, because a drawing account is the owner's withdrawals from the business, and it has a normal debit balance. Now, if you did not have a drawing account and you took it from capital, you would be taking it would be a debit to capital. But the owner withdrew, and we see it's coming out of cash. So the owner, Lynn Dowdy, took $500 from cash. So, owner withdrew cash for personal use. And we know it's personal use because it's in the drawing account. That's the purpose of the drawing account. If the owner does anything personal business with company funds, it goes into the drawing account, because that way you keep it separate from the business. I hope this explained it to you guys, and I hope you have a good day. See you later.